This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, April 6, 2015. So the euro right now is caught between some key levels, and a break above or below will be required for the next key insight. A break above 1053, a recent high, will open the door for an additional correction in this larger, broader downtrend, while a break back below 107.13 will put the immediate pressure back on the downside for a retest of the recent 104.62 multi-year lows and towards parity further down. At this point, the market has been very well supported in recent trade and does look like it wants to take out that 1053 recent high, but again, a break above 1053 will be required to open the door for a more significant correction, which would take us into the 112 to 113 area before the market would consider the next lower top in anticipation and continuation of the bearish move. At this point, only back above 1535, the high that we saw back on the 3rd of February, would compromise the bearish outlook. Sterling. So cable has been in the process of recovering off recent lows at 46.35, and the market could see additional corrective upside over the coming sessions. At this point, a break back above 151.65 would be required to take the immediate pressure off the downside, while only back above the high that we saw going back to the 26th of February around 155.50 would compromise the bearish outlook. Look for the market to eventually carve out a lower top ahead of a break below, the next downside extension below 46.35 and towards next key psychological barriers at 140 further down. Dollar yen. So dollar yen has been content on deferring to a period of consolidation over the past several weeks, though the market did manage to break to a fresh 7-year high at 122.03 back on the 10th of March. At this point, any setbacks should continue to be very well supported towards 118 and certainly ahead of 117 in favor of a bullish continuation above 122 and towards the 125-130 area further up. At this point, only a break back below 115.55, that December low, would compromise the highly constructive outlook for dollar yen. Euro Swiss. So Euro Swiss right now is in the process of a consolidation following the recent setbacks that we saw down towards the 103.90 area. The market has done a good job of being very well supported on a close basis above 104 in recent trade, and this market is expected to hold above 104 in favor of a bullish resumption back above 108.15 and towards the 110, 112 area further up. The market is in the throes of a more significant recovery since those dramatic lows that we saw back in January, but only a break back below 104 and a close below 104 would compromise this outlook and open the door for additional setbacks. Aussie dollar. So Aussie dollar remains locked within a well-defined downtrend. The market recently last week broke to fresh multi-year lows below the previous support at 75.60, though inability to close below 75.60 does keep the immediate pressure at least a little bit on the upside, with more consolidation potentially expected before the market looks to resume a more meaningful bearish continuation. At this point though, any rally should be very well capped into the 78 area, while only back above 79.38 would compromise the bearish outlook. Look for a close below 75.60 to open the door for the next major downside extension towards key psychological barriers at 70 further down. Dollar CAD. So dollar CAD has really been confined to a consolidation over the past several weeks, with the market very well supported above 123.50, but unable at this point to establish above 128. We did see a brief 5-year high back on the 18th of March at 128.35, but the market couldn't close above 128. Still, overall, this consolidation is classified as a bullish consolidation, with the market eventually expected to break above 28.35 towards the 2009 peak at 30.65 further up. At this point, only a break below 23.50 would delay the constructive outlook. Kiwi dollar. So at this point, Kiwi is locked within a broader underlying downtrend, though the market has been consolidating in choppy fashion in recent trade. At this point, only a break back above 78.90 would compromise the intense bearish outlook, while any rally should ultimately be very well capped ahead of 77. Break back below 71.76, that recent low that we saw, that critical low, would open the door for the next major downside extension towards key psychological barriers at 65 further down. SPX 500. So the S&P 500 is showing signs of a critical top off record highs at 2120 from February, but the market is going to need to break and close below 2040, critical support right now, to open the door for a deeper acceleration and the possibility of some form of a meaningful top. A break and close below 2040 would open an acceleration towards 2000, below which would then expose the 1950 area further down. Ultimately, if we do start to see a top carve out, the market may want to start to focus on a retest of that low that we saw back in October of 2014 around 1820. Gold. So gold has done a really good job of being well supported in recent trade after several days back, bouncing ahead of that critical 2014 base at 1131. At this point, a break back above and a close above 1223, the high that we saw back on the 2nd of March, would do a good job of solidifying and securing these longer term basing outlook in favor of additional upside back towards 1300 and above over the coming weeks. But inability to close above 1223 would compromise this outlook a little bit and suggest that the market could still be poised for additional setbacks. But at this point, only back below 1178 would really compromise and put the pressure back on the downside.